So what structure have you seen where someone is part of a group practice, but they're able to offset their gains using passive losses, if any? Like, how do
Yeah,
you
so
structure it that way?
you want to talk about that?
To offset their ordinary gains with passive losses. I
Let me
mean,
structure the question
Or
maybe.
or making their partnership
pa-
income considered passive.
Let me structure the question a bit. So I'll
Yeah.
give also an example of a real client. Like
Yeah,
he's
yeah, yeah.
he's an orthopedic surgeon. He finished residency a couple of years ago, joined a group, became a partner. Really great guy. I'm not sure if he's here, but basically he joined the partnership, and he basically bought in, or he bought into
Mm-hmm.
the partnership. So he's buying. Number one is buying interest into the
Mm-hmm.
partnership. So he needs
Mm-hmm.
to come up with like some kind of like arrangement either with them or come up with cash in order to
Mm-hmm.
buy in. When he's
Mm-hmm.
buying into the partnership, he owns a portion. He owns, let's say, 5%. Let's say that there are
Yeah.
20 surgeons. Each
Mm-hmm.
one owns 5% of the partnership.
Mm-hmm.
So that's ownership number one. He owns the partnership. When he came to us, he received guaranteed payments.
Mm-hmm.
So there is something called guaranteed payments in general. Like you can receive your compensation that way, which is like the partnership just distribute you for your work that you're is because he's working as a surgeon for the group. But there is also like an option to get paid through your own personal management or personal practice company. Even if you're a partner at the partnership, you can still get paid through your own kind of like your own management company and provide services for your own management company. So the question is, let's say that this kind of orthopedic surgeon they're getting let's say $600,000 a year through the like for the services that they conduct for the group, and then another because they share the profits of the group, they get another $100,000 on a K1 from the partnership itself for their interest of the ownership. Now the question is, what can you do with the $100,000 of like basically interest, like the payments, the distribution, and how can you offset that? Is that correct? That's the
Mm-hmm.
question.
Yep. Yep.
with passive real estate income, you cannot. Um, But if you have a situation where you have a spouse, maybe that's involved in real estate, and you can convert that passive real estate income into maybe active real estate income, or even, qualify as a real estate professional, then you can get in a situation where you're offsetting your your ordinary income from a business with real estate losses. Um, there are special rules specifically with rental real estate where it goes a little bit even beyond the active versus passive bucket. Passive rental real estate losses are like really even in a bucket even smaller than that, where it becomes really challenging without real estate professional status for them to offset ordinary income. I mean, there are exceptions. Real estate professional is one. Also, if there's you have a short term rental that you're
Mm-hmm.
operating and super involved in, but that's not really achieving the passive investment strategy. Those are definitely things where involvement would be required in order to get the benefits.
Yeah, a real estate professional is a pipe dream for most physicians. I think
Yeah.
almost everyone at some point is like, I could do this, or my wife or husband can do this, and then they realize it's
Yeah.
a lot of
It's not
work.
as easy as it sounds.
Honestly,
It's a lot of work.
it's not about the easy. I would not like as much as I love hate paying the taxes, but it's part of the system. That's like you sacrifice quality of life. You need to put in the time. Like being a landlord, it's really hard.
Yeah.
It's really, and at some point you worked hard. You went through med school, residency. Now you make good money. You want to enjoy life. You want to you still want to grow your wealth. You want to make investments, but you don't want to be on call basically, not just for the hospital or for your patients. You want to, and now you're also on call for your tenants, and they pay you much less, by the way, than what the group will, the patients will pay or the insurance companies.